And despite fresh all-time highs on Wall Street yesterday, Asian stock markets they opened lower today as worries about China's slowing economic growth and regulatory changes weighed on investor sentiment. However, in India, Sensex has crossed 57,000 mark. Japan's industrial output shrank in July as car production took a hit from resurgence of COVID-19. It has cast doubt over recovery in world's third largest economy. Hong Kong's Hang Seng and China's benchmark CSI 300 index opened down 0.1% and 0.2%. China's factory activity expanded at a slower pace in August as COVID-19 linked restrictions and high raw material prices put pressure on the world's second largest economy. Service activity has contracted here as well. In India, GDP data is due later today. To talk more on this, we're joined by Margaret Yang Yan, DailyFX strategist from Singapore. Good morning to you, Margaret. First of all, in India, 57,000 mark. Well, clearly markets are at a record high. What do you expect this week to happen? Clearly, last week's comments by US Fed Reserve Chairman, they are still giving some boost to the markets. What's your assessment here?
Good morning, and thank you for having me here today. I think Jerome Powell's speech at the Jackson Hole Symposium last week is sending global equities to record new highs because it gave a dovish signal to investors that the Federal Reserve is not in a rush to raise interest rates anytime soon, even though they are going to scale back the asset purchasing by the end of the year. So this answer is pretty satisfactory for investors who have already anticipated the stop of QE, but who wants to know when the interest rate hikes will start. And the technology sector is most sensitive to interest rate hikes and long-term yields. Therefore, we saw that Nasdaq 100 index outperformed Dow Jones and S&P over the last two trading sessions. Is pretty bullish. And in Asia Pacific, however, sentiment seems to be mixed because the Greater China markets are dampened by Beijing's crackdown on private sectors. However, the rest of the markets are still in a very good shape.
Margaret, now some corners are saying that it is a bubble that can go burst anytime. And what are your theory on this? Is it a bubble or is the rally sustainable?
Well, I think, yes, indeed, there is a bubble. Bubble is everywhere in our financial world. But this U.S. equity bubble may not go bust anytime soon because of Federal Reserve's patience and support to the economy. So I think so long as the Fed will not raise the interest rates by 2023, I think this rally is still sustainable. However, the pace of rise in asset prices may not be so strong compared to the last 1 year, and we may see a slow bull market in the next 6 months.
But in China, now there are worrying signs of a slowdown in economy. We have seen services sector contracting, manufacturing is under pressure as well. Do you think going forward, this data, this overall, we can say that some pressure on China's economy can play a spoilsport for the markets?
Indeed, that's a very, very good point. I think now Chinese economy is facing tremendous pressure, downside pressure, as the peak of the economic recovery from the pandemic is already behind us. And also Beijing is tightening control of private sectors, especially the technology names like Tencent, Alibaba, and online education firms. So this is adversely impacting the market sentiment, jobs market, and economic growth. So I think so long as this regulatory crackdown persists, the market will not rebound easily. However, if the economy is really falling out of control, the PBOC may step up and ease monetary policy. So it may cushion the downside.
All right, thank you, Margaret. Thank you for talking. WION now available in your country. Download the app and get all the news on the move.